Wednesday, the 9th of May, 2018, and the S&P 500 had a nice day here, up 2.5 points, and pretty much right up to the year-to-date volume-weighted average price. As I pointed out in the chat room, that's also a 50% retracement of the low to high. So, in other words, we're at the midpoint of the year's trading in terms of price and in terms of time, which is kind of unusual that they line up together there. But that's what we have. We still have this downtrend line, which, is it valuable at this point? I don't know, but it's worth looking at. That's not valuable. That was an accident. But let's take a look at right here, this horizontal line, and how it lines up near that downtrend line. So, one potential scenario is that this market, this current rally continues to go up through this little level here and then begins to pull back. In other words, trapping buyers above this level, similar to what we had 2 days ago right here. Let's go down to the shorter term time frames. We are on the 15-minute time frame. As we've noted, we're above a rising 5-day moving average, and we did break beyond this resistance from earlier in the week. So when we look at the near-term levels, the week-to-date volume-weighted average price, we were above the entire session today. The 2-day VWAP, we were above the entire session. And after that brief shakeout in the morning, the buyers really ramped it up, and that's what took it up to the year-to-date VWAP. So buyers remain in control. We have a declining 50-day moving average, so that tells us we're still a little bit cautious. We have 10 and 20-day moving averages crossing back and forth multiple times, which just confirms indecision. So we're going to continue to do what we have been doing, which is to focus on the individual stocks, and we continue to have some great trades in the individual names. As I pointed out yesterday, that despite the uncertainty in the market, the individual stocks are telling us that long is the correct way to go. We didn't have any pullback in the NASDAQ. We are back above the peak that we had seen last month. So the buyers remain in control here. It was a short-lived little correction through time, Monday and Tuesday after that gap higher, and we are still above the rising 5-day moving average, so it wouldn't have made sense to sell it short. Of course, not when we have a rising 5-day moving average. Back to the daily time frame, the next level of interest, I suppose, here would be up at the top end of this range, and then you're going to have all these people spouting out all the time about how they have to close gaps. Not all gaps get closed, not significantly, at least. Eventually, after time, they will be closed, but that's the next level of interest is upward to 169. The Russell 2000 did break beyond this level. I had suggested midday, if you were long, that's a good time to take some off, as we suggested that actually Tuesday night. The market did recover, and as I had suggested, a stop should go under here. I think that stop should now be raised up underneath today's low. The daily time frame looks like we are headed for that 160-ish level, and if it were to break out there, I would be highly suspicious of that breakout, given the magnitude of the move we've had from 152 now to 159, and that would take it beyond 160 and change. So just the higher it goes, the more days it's been up, be aware it becomes more likely that we will have some corrective action, whether that be through time or a price pullback. Semiconductors are right up through that year-to-date VWAP. As we mentioned, we thought that was the potential area for sellers to come in. So we look at a shorter term time frame and we see there was no evidence of that happening. Next up is the declining 50-day moving average. That's up at what is this level? Just above, about 104.30-ish. So if you are in the semiconductors, it's a good counter trend trade, but the primary trend with that declining 50-day moving average does remain suspicious. Biotechs are, as we've noted, trying to recover. They've maybe put in a little bit of support down here. That's not a double bottom. A double bottom would only be identified after it breaks beyond this high here, and then the height of this would be added to give us a price objective of about let's just call it 6 points. So one 13-ish would be the measured move if that were a double bottom. But the point is, we're not trying to look for double bottoms. We're looking for order on the shorter term time frames and to see who has control of the market. The 5-day moving average is flattening out and beginning to turn higher. However, the volume weighted average price off this low we just got up to today from this peak, we're right up in that area too. So you can't really have any confidence in this move. Maybe it continues to move higher, but the risk simply doesn't justify the potential for reward. The odds are not good there. So to me, you continue to avoid the biotechs. The financials have continued up through their declining 50-day moving average. Their next test comes at the year-to-date VWAP at 28.35. And again, I will repeat it over and over again. People who sell new lows, whether it's right here or right here or right here, typically get what they deserve because they don't ask where had the market come from. Just as if someone buys the breakout up here, they're going to get what they deserve most likely because the market will typically do something like this and then pull back.